VWAP. You've seen it on your chart before. In fact, we've already covered it here on the channel. But this time we're not talking about what VWAP is. We're talking about how it's used today. Because the truth is, most traders treat VWAP like a buy or sell signal. But for institutions, VWAP is something much deeper. It's the heartbeat of price discovery. This is episode 3 of our series, What Works in Today's Market, where we put the most popular indicators to the test and reveal whether they still hold up in modern markets. Today we're taking a second look at volume weighted average price, or VWAP, and exploring how pros actually use it to find true value, trap liquidity, and time high probability trades. Now, before we get started, this video is for educational purposes only. I am not a financial advisor, and you should definitely trade at your own risk. Now let's just go over a quick refresher. VWAP is the average price weighted by volume throughout the session. It's not just a line, it's the equilibrium where buyers and sellers agree on value. If price is above VWAP, buyers are in control. If it's below, sellers are dictating value. Most traders think of VWAP as an entry signal. Buy when price breaks above, sell when it breaks below. But that's not how pros use it. VWAP isn't a green light or a red light. It's a map of intent. It shows you where institutions are transactioning, not when you should click buy. Now let's go over how pros use the VWAP. 1. Institutional execution. Funds use VWAP to benchmark their execution quality. They accumulate below VWAP in uptrends. That's their discount zone. And distribute above VWAP in downtrends. 2. Session structure and liquidity zones. VWAP defines the day's fair value. Price acceptance above VWAP means buyers own control. Rejection below VWAP means sellers dominate. 3. Anchored VWAP and Confluence. Advanced traders anchor VWAP to key events, like session highs, CPI releases, or major opens, to see where new volume-weighted control points form. That's how you spot institutional footprints. In today's market, VWAP still works, but only when used in context. When you combine VWAP with tools like CVD divergence and structure, it transforms from just a line into a story of where real traders are positioned. VWAP still works not as a signal, but as a truth detector. It reveals who's in control, where they're defending, and when that control shifts. If you've been following this series, you know we've already uncovered how moving averages and RSI behave in today's markets. And now VWAP joins that list. Next up, we're breaking down one of the most overused and misunderstood indicators in trading history, the MACD. You've probably seen these two lines cross and thought it meant momentum. But what if I told you the MACD's real power isn't in the crossover? It's the shift before it happens. In the next episode, we're breaking down how to read the MACD the way the pros do and see if it still works in today's market. Now, if this video helped you see VWAP in a whole new way, make sure to hit that like button and subscribe. This is X Viper TV. Thanks for watching and happy trading.